Let the good times roll. I mean, what more could we ask for than the PPI following up on yesterday's CPI and showing inflation is cured. It's over. We don't have to worry about inflation anymore. Well, that's not 100% true, but I've already talked a lot about that in the past. Well, Elon Musk says computers will be smarter than humans in 5 to 6 years, and he started a company related to that. PPI comes in lighter than predicted, as I just mentioned, and the markets are very, very happy this morning. The stocks are up, going crazy. Tesla has nothing but good news, but why isn't Tesla participating in the rally? This is Randy Kirk. If you like this morning show, hit like and subscribe and notify. I got a great video coming up this afternoon with none other than Brian White, where we will have a discussion about what is happening to the legacy automotive companies and even the startups. They are failing over and over and over again. You want to see that, so hit notify. And then Patreon, very good week last week, and even early this week with Patreon folks joining up. I have another new video up that I put up yesterday talking about how to do leaps. And many of you had asked for that video, and you can join right now and have 7 days free trial. Take a look at that video, and then you don't have to pay. Anyway, Elon Musk clearly wants to win the race to AGI. This is obvious. He believes AGI will happen within 5 to 6 years, where there will be no human that is as smart as the computers are, and they'll be able to do everything, every single thing, every single intellectual things that humans can do, obviously, other than create. He is already building the biggest neural net training computer in the world at Tesla. He just started a company that's designed to determine the basic truths of the universe. That's all they're going to do there. They're going to find out what the basic truths of the universe are. And he's asking for opinions. You can add your opinion to this question of what are the great unanswered questions that we face as a species. So tomorrow on Twitter Spaces, he is going to hold a meeting where he's going to explain about the new company X.AI. You can go on the website right now and see about the company and about tomorrow. And he'll be talking about what that company is for, how it's going to work, introducing maybe some of the folks that are going to be part of that core group that's going to be involved in the new company. And I'm hoping also talk about how it impacts Tesla. So that's for tomorrow. All right. Well, the big news for the morning is, of course, that the PPI came in lower than expected. This is huge good news that confirms the CPI from yesterday. Of course, the PPI is predictive, okay? It is a leading indicator. It predicts what's going to happen in the CPI later, because we're talking about what the purchasing agents are paying for their goods right now, and that is going to flow through the economy into retail eventually. So the PPI, they're saying their numbers are really good. A key component keeping the CPI even where it is a lagging indicator of rents. So all 100% of what the Fed is basing their numbers on right now in terms of still needing to increase is about lagging indicators. All of the current and predictive indicators are showing we are out of trouble with inflation and likely to continue down, could even go into deflation or disinflation or both. So you've got the Fed, even saying that they know that it's only housing that is still an issue. Okay, I said yesterday, let me just repeat for those who didn't see this yesterday night, there's one other issue that's going up, and that's insurance rates. But the insurance rates are based on what the insurance companies last year had to pay for car accidents. They were having to pay a lot more to replace cars because of the continued up and down boom bust situation with cars last year, and the failure that companies couldn't get enough chips and all this kind of stuff. So the prices of cars were really, really high. Well, they're not now. Prices of cars are coming down. Prices of used cars are coming down. I don't get what's going on with the Fed. In fact, by the way, just in case, just give me the detail. PPI came in at 0.1. So that's a 1.1 year over year. What is the Fed waiting for? It's certainly well within what they're looking for. So the Beige Book comes out. Now, I have to be honest, I don't pay a lot of attention to their Beige Book, and they've got these other books that come out. But I wanted to read today's because they had just put out their own report 2 weeks ago showing that they're in great danger of crippling the economy, that small businesses are in trouble, they can't get loans. So I thought, well, I better take a look at the Beige Book, because maybe the Beige Book, which is a report where all of the different feds are their departments, the folks that work for these different Fed agencies are asked and polled about different aspects of the economy. And so I thought, well, okay, maybe this will give me the reason why the Fed feels like they've got to increase. Well, here's what the Fed report said, according to Reuters. It echoes the report that came out. Overall economic activity increased slightly since late May. The U.S. Central Bank said in its latest Beige Book, compendium of surveys and interviews conducted across all 12 districts through June 30th. 5 districts reported some growth, 5 districts reported no change, and 2 showed modest declines. This does not look like an economy that's on fire. I think it's doing a little better than the Beige Book says, but the Beige Book says modest growth, barely creeping along, stagflation. If there was inflation, we could call it stagflation, but definitely a stagnant economy. So then it goes on to say, overall economic expectations for the coming months generally continue to call for this same kind of slow growth, the Fed said. Meanwhile, the report largely dovetailed with other recent data suggesting upward pressures on prices are softening. Quote, prices increased at a modest pace overall, and several districts noted some sliding in the pace of increase. The report said, taking note of the different extent to which businesses were able to pass their initial cost increases to consumers. This is what I said yesterday. This is what's being reported in other places, is that the independent businesses said, we can't increase our prices. We'd like to. We have some increase in costs, but we don't feel we can increase our prices. And only 30% were anticipating any kind of price increase in the next 6 months. Looking ahead, they said, this is quote, price expectations were generally stable or lower over the next several months. Employment was also reported to have continued to increase modestly and contracts in a number of districts because of wage increases. The wages have remained higher than Fed officials believe are consistent with low inflation, but now we're returning to pre-pandemic levels in terms of the increases. The Richmond Fed said that manufacturers in the district cited rising interest rates impact on activity and a pullback in consumer spending as leading to drops in new orders and in some cases, rising inventory levels. In upstate New York, meanwhile, auto dealers said new car sales have been strong as pent-up demand has been satisfied by ongoing improvements in inventory, although used car sales remain subdued. The report also flagged the ongoing challenges faced by the commercial real estate sector. We know about this because of the coronavirus. Another one of these up and down things. It may be permanent, but we don't know. But office space is still a problem, and it is affecting local banks. However, the Fed noted commercial real estate markets remain mostly unchanged with persistent high office vacancies, and said conditions on the broader finance sector continue to deteriorate, though at a much more subdued rate than in previous months. The San Francisco Fed, which has been the epicenter of bank troubles this spring, noted that their report relatively calm for the financial sector in its district. By contrast, conditions for small and mid-sized regional banks in the New York district declined, citing lower loan demand across all loan segments. I just don't get it. I went out and I watched about a half a dozen different pundits, economists, professors, and other experts discussing this current balancing act. Should the Fed increase? Should the Fed pause again? What about the inflation rates and how is it impacting, and whether inflation is likely to continue to raise its head or might raise its head again? Well, the old adage was true. If you get 5 economists in a room discussing any subject, there will be 6 opinions. They were all over the place in terms of whether the Fed should or shouldn't raise. You know my opinion. Okay, well, the bond market continues to show the right path forward for the Fed, with yields falling dramatically on the 10-year, and that continued to be true this morning. All right, Tesla might be getting swept up in a new narrative about BEVs favor in. So we've got this situation where BEVs might be falling out of favor. This is a headline all over the place. Oh, we've had this run up, but now it's not happening, at least in the United States. Well, that's pure nonsense. It's clear that Ford, General Motors, Volkswagen, and many other BEV makers are failing with car after car. And every car startup in the United States has failed except Rivian. And if they don't get into some positive margins too, they're going to just follow the others. So I've invited Brian White to talk about that this afternoon. You don't want to miss that. The Times of India is reporting that Tesla is moving along with their plans to build a factory with a capacity of 500,000 vehicles at $25,000 each. This is just a minor kind of update that the talks continue. So that is good news. We've got the Berlin good news about doubling there. So what's causing the Tesla nonsense? Why is Tesla stock not going up? Well, Cathie Wood's ARK Invest funds are selling Tesla. Headline, Cathie Wood selling Tesla, $7 million, blah, 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 blah. Well, of course, but you have to dig into the article. And sometimes even in the article, they don't say Cathie Wood has to sell. Her funds require her. That's her deal that she made with her investors. If she has any stock with a position of more than 10%, she has to sell. Well, guess what? After what she sold yesterday, I just looked up the ARK-K. It's at 11% after she sold. She'll be continuing to sell. Could that be a part of what's going on, of why Tesla is kind of lagging this overall market increase? I don't think so. Unfortunately, I'm out of ideas. It's hard to have more good news than Tesla has right now. Everything is happening. The expansion plans of Berlin, the update on India, inflation under check. So interest rates probably coming down later this year or early next. They creamed their shipment numbers. Earnings are coming Wednesday, which normally cause Tesla to rise. I mean, I just don't know why Tesla is this morning, as the last time I looked, floating around at a $2 increase with the market up 100 points. I'd love to hear your comments. Why do you think Tesla is still fiddle-fussing around with a $2 increase this morning? But I'm going to go out on a big limb. I'm still saying Tesla will go to 300 by Wednesday. It might bounce off of that, and it might close lower than 300 prior to the earnings call on Wednesday. But I'm saying it goes up to 300 sometime between now and then, and we'll see what happens when it gets there. Specifically this morning, bond yields, last I checked. Well, let me just do a double check here right now. Let's take a quick look. So Tesla up 126. It was up to 2.5. Now it's down. Now it's at 126, $1.26. So same old. Let's look at bonds. So the market is still up, of course. Bonds are still down 3.8 on the 10-year. The oil is down, even though the dollar is down. So we have the dollar down, which would tend to make oil go up. So if oil is going down today, that means it's going down even more than you think. So this is very, very good. Oil is still trading right in the middle of the range it's been in for about 6 months. So this is really, really good on the inflation front. Bonds now, the 2-year has been closing the gap today, actually been closing the gap for the last couple of days. And so it is now only about 80 basis points different than the 10-year, but that's still a big inversion. The 2-month is still inverted way out to here. Again, I'm beginning to believe that this inversion has nothing to do with predicting a future problem in the economy. All right, so you definitely, if you didn't see it yesterday, you definitely want to go back. I did this video with Brian White yesterday, predicting no increase in units produced in Q3. You want to see this video. You want to see why. You want to see why he's thinking this way. He was the number one, he was the best predictor of both units sold, units shipped, if you will, and units produced in Q2. So you want to see what Brian has to say about what's going to happen in Q3. I don't necessarily 100% agree with him, but I'm not that far off of what he's saying. And he also gives a prediction. We both give kind of a rough prediction in terms of unit sales in that video. So you want to go to the card in the corner. And then later on today, we've got this video coming with Brian talking about why Volkswagen, General Motors, Ford, et cetera, down the line, why these companies are and all the startup companies are failing to launch with regard to their BEV products, and what might change that could make that better in the future. That will be up later today. So that's why you want to subscribe and hit notify so you're reminded of that, and reminded to, of course, visit me in the morning with this show each day. If you like this show in the morning, please hit the like button. And then with regard to Patreon, seriously, I'm going to be putting up real good content on Patreon. There are now 3 specific unique articles up on Patreon. It's free to join right now. You get 7 days for free. And then, of course, after that, it's exciting $5 a month. So you might want to take a look at that. And then buy the books. Buy the books. Thank you. This week has been a really strong book for book sales. Lots and lots of books going out right now, the Elon Musk mission in particular, but we've been selling a few making money out of thin airs. If you are a business owner and you don't understand your books, you don't understand how to look at your P&L, you don't understand how to look at your balance sheet, you don't know how to use that to make more money in your company, you want to read Making Money Out of Thin Air with my good friend and my CPA, Shayla Chamberlain, and you might want to make her your CPA after you read that book. Okay, that's all I got for you today. And maybe Tesla will catch fire later today. We'll see what happens. Randy Kirk, it's been great talking to you.